Hello, 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 and welcome back to another Kadena-native AMA. We are so excited to have Lago Finance with us here today. My name is Tyler Benster. I'm an advisor to Kadena-native, which is the innovation network driving hypergrowth of what we believe is the best blockchain for builders. Today, we have a special project interview as we revisit the amazing progress made by Sergio and Matt from Lago Finance, which was a member of the first cohort of grants at Kadena-native. And so thank you so much for joining me today. Sergio and Matt will bring you up onto the stream right now. We're really excited to learn more about the new launch, but maybe just to refresh people and to introduce yourself to those that maybe join us for the first time, would you mind just telling us your name and telling us just a few things about yourself and what brings you here today?
Hi, good to see you, Tyler. It's always great to be here with you. Thanks for inviting us. I'm Sergio Mello. I'm a co-founder at Lago Finance with Matt, and I have a history of entrepreneurship, starting back in Italy with Web1 companies, then going to Asia with Web2 companies, and then now I live in the US. And I'm in the East Coast, so it's a good afternoon for me. And we're all in on Web3 since 2014, 15, 16. So only recently we started building on Kadena and going in the proof of work direction.
Yeah, hey guys, I'm Matt Teeter. I'm the other co-founder of Lago Finance. Like Sergio said, we've been around since about 2015 in the space, since about the launch of Ethereum. That's what really got me involved in crypto, the whole idea of a decentralized world computer. I ended up dropping out of my master's program to start my first crypto company, an algorithmic trading bot, and a whole trading platform and suite of tools. And now, we've moved on. I've worked at a couple crypto startups since then, and now starting my own for the first time, building some DeFi on Kadena. And we're very excited to be on launching our first major project today.
Right on. And we're going to get a lot into the launch that's happening behind the scenes here as we speak and some of the new news. It's just so amazing. I met Sergio just a couple months ago in Miami and Matt shortly after in Austin. And over the course of just a few months, Lago Finance, I think, has been a poster child for how quickly progress can be made in Kadena, but not just Kadena, in crypto in general. And we're going to dive into all of this. But first, I did want to make sure that we gave some shout outs to community. So we got some hellos here. I just want to make sure that everyone that is here with us today knows that these AMAs are interactive, that we're looking at your comments that you're posting on YouTube, on Twitter, on LinkedIn, wherever you may be watching us. And please feel free to ask questions or engage with the comments, and we'll try and bring some of those comments up onto the stage here and get some thoughts from Sergio and Matt. So it's great to have you all with us here today, and this is interactive. This is for the community. Really, really excited to chat more. So first, I guess I wanted to give a little bit of context on the past and present of Lago and sort of how we got here today, just to make sure we get everyone up to speed that may have missed the previous Twitter AMA or the YouTube AMA. So maybe we could start, if we could just get a little bit more detail on your backgrounds and how you ended up choosing to build together on Kadena.
Yeah. Well, there's a lot of parts of the story that are intertwined, so it's hard to start from somewhere. I think, as you mentioned, Tyler, probably the catalyst event was meeting you and other Kadena people at the Bitcoin conference in Miami earlier this year. That was exactly when Matt and I had decided to drop every other project and focus on building a stablecoin. And so picking layer one to build a stablecoin in early 2022 was a challenge, because a lot of up-and-coming layer ones are obviously competing for attention and also proposing very interesting technological solutions to consensus mechanisms, to scalability, growth, to innovative and lush ways to stimulate the ecosystem and attract developers. And so all these factors are clearly difficult to put on the same weight scale. And at the same time, we had already been working for some time on trying to understand how DeFi could really not only grow in itself, but also make a dent in the rest of the world. So the real broader world. It could be financial, it could be identity. There's a lot of intertwining components that may benefit from the innovation of blockchains. So it all catalyzed into our meeting and understanding that Kadena could offer the right setup for enhanced security, a very strong consensus mechanism that has been battle tested with Bitcoin, and added scalability. And specifically, we started looking at Pact, the smart contract language on Kadena, and we realized that in its simplicity, it can offer a lot of added value. And this is a shout out to all the developers out there. Give it a try. Of course, just like any new nascent ecosystem, the tooling and the available documentation may be minimal, but that also means that there's an opportunity to be the first in building something big. And this is exactly what we thought. Like, wow, this is a white paper. This is a nice, beautiful whiteboard, and we can draw the first lines. And so exactly building the stablecoin is one of the fundamental components of any financial blockchain ecosystem. Let's call it DeFi if you want. And so we started with that. And I don't want to jump straight to the conclusion, but having the amount of lines of code and the complexity of the code to have a basic stablecoin issued on Kadena is so minimal if you look at it in a large scheme of things. And maybe Matt can add something on this directly because he's been more involved with the code.
Yeah. I would definitely say, I mean, stepping back for a second, we knew all the layer ones. We knew a lot of the founders. We had talked to them, and we really thought that Kadena was just a technically superior choice to us. And so, and especially with Pact, I mean, I had done Solidity development before. It's kind of a nightmare. I mean, it's very hard to know exactly where the bugs are going to be, and you have to have many audits. Lots of different things are moving at the same time. We see hacks happening all the time. We don't feel like that's an issue at all on Pact. I mean, with Pact, with formal verification, it makes it so much easier to be able to write clean, quick code that does exactly what you need it to do. And that's what you need on a blockchain when you have tens of millions of dollars at stake. So that's exactly why, we decided to build on Kadena in the first place.
I'm so delighted to hear that, and Matt, you said talking points better than I ever could. So it's always great when you sort of organically hear from the builders themselves that some of this hard work that Kadena core team does is paying off in terms of your domain and your applications. So we actually have already gotten a ton of amazing questions from community. So I have a few more questions that I want to bring up to help sort of frame discussion, just to make sure we get through some of the nuts and bolts. But then we'll probably try and be a little bit more community driven here, if that works for you folks, as there's a ton of enthusiasm here for Lago and the launch. And it seems like we have an audience that's already a little bit more clued in than one might expect. So that's really, really awesome and not surprising from the Kadena army. But I wanted to also jump in a little bit for the philosophical underpinnings of what you're working on for Lago, because I know from speaking with you two a bunch that this isn't just sort of a technical solution looking for a problem, but really your vision for what you're building and for stablecoins and how stablecoins and decentralization should be done comes from some fairly deep thought. So I was wondering if you could help give an overview for those that are new to the project for why Lago Finance was created and what some of the vision and philosophical underpinnings are of what you're trying to accomplish.
Yeah, of course. Well, the name itself should be revelatory. Lago means lake in some Roman languages and Latin languages. And lake is where all the liquidity pools down in a mountain setup, in a mountain scenery. And it's a very natural thing to happen, and they also look beautiful. So we want to give this type of property to money to flow naturally to where it's supposed to be in a very efficient way. And the way to do it is, of course, to start creating stable coins that can flow without much friction. So the problem of friction is multifaceted, of course, and the technological one is the only one we've addressed so far, and basing the stablecoin mechanics, but also the governance on Kadena can definitely help in that direction. And then you have all the traditional and DeFi financial ecosystems, and you have to see how improving settlement times and other type of properties of currency flowing can improve those systems. The biggest figure that I always keep in mind is that the total money supply globally circulating among all countries that issue their currency is about $70 trillion equivalent. So China will issue the Chinese yuan, Europe their euro, and so on. But this total 70 trillion is needs to move left and right, up and down all the time, obviously, to settle payments. And these are peer-to-peer payments, like Matt is giving Sergio $3 to share a Uber ride, or it's a $1 billion payment for a major settlement between banks for overnight interest rates, or it's a commodities trading between South Africa and India, and so on. You have infinite cases for payments, and they all have the same property. The faster and the more securely the money flows from A to B, the better, because if the money is not stuck in the system but is in the holders or the receivers hands, you have more capital efficiency, and that receiver can redeploy the money to better to speed up the business. So velocity of money is known as a beneficial factor to economies in general. There's other cases like rebalancing of collaterals and a lot of very specific financial use cases where introducing a faster finality and secure finality can really improve things. But this is it looks very technical and looks very financially driven, but efficiency is good for everyone in all venues of life. Think about more efficient cars, electric cars, and all those things. You might just think of the benefit for the wallet of the owner of the car, but it's broader than that. Systemically, if everyone uses more efficient cars, more efficient buildings that retain heating better, and overall the global economy improves, and we all live a little bit better. So that's where we're starting from. Maybe Matt has more specific views on various issues.
To me, I would say if we go back and think more specifically about other decentralized stablecoin solutions, I really think there's been a lot of problems that they have tried to solve now. I think a lot of the original models that were built for stablecoins were not built with the mindset of where does this go in 20 years? How do you actually bring institutional traditional clients involved into these ecosystems? A lot of it was based on, degens and, the moment of, oh yeah, well, maybe we could just make something that people in crypto want to use. And so a lot of times, and now you're seeing all of these stable coins like MakerDAO, some of these other major ones try to bring real assets in, but now they weren't really built on that ideal in the first place. So it feels more like an add-on. We want to go from the ground up to try to build something that really is trying to be inclusive of everyone. DeFi, TradFi, small retail, big institutions, and something that, can be quick, easy, settle instantly, and be used, worldwide. And that's also, part of it goes back to the scalability of Kadena too. Building on a network like that, where you actually can scale out and you're not going to have Solana-like outages, is huge for us. And so it's a big part of, the whole long-term vision and why we're here in the first place.
So speaking of bridges to TradFi and other aspects of the ecosystem at large for finance, of course, Lago has been running a bridge with KWUSD, and the first stablecoin available here on Kadena. And for those that have been monitoring community and Discord more closely, they may be aware that Lago actually has a pretty big release and announcements that are coming out here today. So I was wondering if we could talk a little bit about what you've been up to the last obviously weeks and months, but I think from a community perspective, this 24 hours is starting to feel pretty special. What's going on?
Yeah, today is a culmination of a few months of work. Of course, the bridge that we launched a few months ago was just a stepping stone into bringing over liquidity and collateralization ready assets to Kadena. And today we're launching USD2, which is a decentralized stablecoin that is natively anchored on Kadena. There's a lot to unpack there. What does decentralized mean? Well, first of all, it's governed by a DAO, and so all the decisions that direct the development and further development of USD2 are going to be taken collectively through a governance mechanism that is rather obvious for crypto people, but it's for the non-crypto people. I'll just explain that the right to vote for proposals on a DAO is represented by a holding of governance tokens. And the governance tokens are also cryptographically secure tokens, like most of the other crypto tokens are held in wallets and may or may not be liquid and available on various DeFi venues. So the USD2 is an attempt to create more frictionless payments around the world, and it has to be collateralized by USD denominated assets in order to be as stable as possible. We've seen in the past how stablecoins that have relied a little too much on algorithmic mechanisms that collateralized on either nothing or on arbitrarily chosen assets didn't really go too well, and so we decided to keep it on the side of caution and have as much appeal to institutional markets because of its stability. Remember that the broader appeal to institutional markets benefits everyone in the end, because a more liquid, a more distributed, a more accepted currency is also what retail and DeFi users need in order to interface the DeFi world with the real world. And Matt, do you want to keep talking about USD2? There's so much to say that I have
yeah, I agree. I mean,
long list here.
Going back to the mechanics and how it works. I mean, we thought a lot about how this system should be built. We saw all the things that had worked in the past, all the things that didn't work. We definitely didn't want to go down the same route as some of these like under collateralized stablecoins that have had major blow up events in the past. I mean, there's been a lot of things that we could look at in order to not make those kind of same mistakes. And we decided that, you need a solid one-to-one backed stablecoin that works directly with riskless assets, not with risky assets, not with trying to do liquidations and other things of that nature. We've seen a lot of people in the community who asked us, oh, why didn't you use KDA and some of those other questions. And, it's much more challenging for a retail person and for institutions to get involved in these, because they become so much more complex than if you just have a single stable asset that backs your stablecoin. And then you don't have to worry about what happens in a bank run scenario. That you always have that redeemability that people can rely upon going into the future. And so that was really important to us when we started building this.
So talk to me a little bit more about USD2. Mechanically, how does it work, and how will sort of retail or people listening here acquire USD2, and how might they then use it?
So currently, how it works is that we're going to have it one-to-one backed with KWUSDC. So in order to mint it, one KWUSDC becomes one USD2. And you can mint it directly through the site on USD2.lago.finance. We haven't launched yet. We're giving the community just a little bit more anticipation and anxiety before we go ahead and launch it to the main world. But so also along that, you can redeem in the same way. You go on, you take your USD2, you burn it, you get one KWUSDC back. And this KWUSDC is always kept to its value through USDC through a bridge. So this is very important to us as well, as far as keeping that full redeemability. Excuse me. Anyway, going back though, this is only the V1 implementation of the stablecoin. Long term, we have a lot more plans, and we're really excited about the community's involvement in this as well through the DAO, and being able to make those decisions exactly on how the stablecoin should be formed in the future. So, this is a very simple implementation. We hope within a month or two to be able to continue to build upon this and to create a much more complex, interesting stablecoin that everybody can get excited about in the Kadena ecosystem.
Yeah, if you're gonna something, it's very important to note that anything going forward with Lago Finance is going to be DAO approved and based and voted on. So what we can talk about is what we propose to the DAO and the proposals for V2 and V3 of the USD2 stablecoins are bringing on track to be a little more capital efficient. So having a dual token dynamic with the governance token and collateral tokens to be used in order to mint and redeem with a collateral ratio that is not necessarily always 100%, but also to have extra mechanisms that are not yet implemented in DeFi to still keep the total collateral at or above 100%. And that is our target, and that is going to be the DAO's target, because keeping the collateral at or above 100 is what makes the token stable regardless of market conditions. So this is going to be the next big step. In the next month or two, we will work a lot on the decentralization. So there will be more platforms to interact with the DAO, to become a voter, to launch the governance token, and all those actions are going to be obviously always visible through the Twitter, Discord, and website channels.
Terrific. So it sounds like USD2 is really this launch pad, this sort of first but key step in terms of what's to come. It's the first way of saying, look, we have a way of bridging over the stablecoin USDC from Ethereum to Kadena wrapped USD and USDC, and then you can use that to mint USD2.
Yeah.
But with the DAO's involvement and the community's involvement, sort of the future of the stablecoin, combined with the Lago Finance ideas and engineering talent and implementation and execution prowess, that there's going to be this really interesting opportunity for sort of a community administered, community owned, and community driven stablecoin to emerge that's going to serve the whole ecosystem.
Yes. And also it's important to note that, as I mentioned earlier, ultimately, this is to benefit the whole world, not just us that are pioneers on DeFi. And therefore, the utilization of real-world assets for collateralization is next on the line. Now, when exactly, I can't tell. Again, it's going to be a DAO decision. But as soon as there is enough treasury critical mass and liquidity, it will be possible for the DAO to start accessing real-world assets for collateral. And with this, we're very proud and happy to see pioneers like MakerDAO making this happen already with traditional banking rails. This could be seen as an approximation of traditional money, and therefore less decentralized. But the truth is that in any case, if you want to peg a currency to the US dollar, the underlying assets have to be US dollar denominated. So you may as well go straight to the source and disintermediate as much as possible to get to the source of those assets. So without getting too much financial jargon, basically, there's a lot to do on the roadmap. And part of it has to do about decentralization and governance. Part of it is real financial infrastructure building. Part of it is decentralized smart contract infrastructure building. It's a complex roadmap, and it will take time to develop all the steps in the right sequence.
Fantastic. So we have a ton of community questions. We'll start to get through some of these. So first up from Mosh and 1NA, we have, what happens to USD2 when CBDC enters the market? I believe they're referring to central bank digital currencies. In the United States, at least, my understanding is that the Federal Reserve has not made a decision on whether to implement a CBDC just yet. Other countries have been a bit more aggressive, but an interesting question nonetheless. Curious what your thoughts are.
Yeah, I've been privy to the first moves of central banks into the central bank digital currency space already a few years ago. And so this movement started probably a decade ago, and in the last few years, it started getting a lot of traction. Also because central banks have noticed how digital currency and cryptographically secure currency is picking up momentum, and it can be very effective and powerful and efficient. So the reason for a central bank digital currency to exist is to provide efficiency and replace all the mediums of exchange of value. The point is that every country has different priorities in how to, on which first principle to utilize in order to design their central bank digital currency. And it has a lot to do with privacy, with efficiency, with respecting the existing order of systems, to disrupt, to allow for more or less interoperability and composability of this new currency with other existing systems and currencies. So it's not all the same, and therefore talking about CBDC as a global single currency doesn't make any sense. If we're talking about the US CBDC, finally, recently, like in the last few months, some Fed banks, not even all of them, have started talking about a roadmap. There have been already pilot projects before. I mean, this it's not the first time they're coming up to it, but the US system, it doesn't usually react very fast to this type of innovation, and there's reasons for that, and it's actually a good thing. But what I think the first iteration of publicly available central bank digital currency in the USA will be is, in any case, not tomorrow, probably not next year, maybe a few years down, and it will be only available for certain privileged parties, maybe a few main wallets, maybe the tier 1 or tier 2 banks. So you won't really have the type of interoperability and composability that you would expect from a stablecoin, and which is what Lago Finance is designing for. So we're coming at it from two different angles. Stablecoins are approaching from the efficiency and availability, resilience angle, whereas the CBDCs are coming in from government-mandated, hyper-regulated, central to the system angle. And the two are going to coexist for a long while. So there's going to be at least a decade in which there's going to be a coexistence of stablecoins and CBDC. In which ratios, it's hard to tell, but definitely stablecoins are faster to grow now because they have this moment in time where CBDCs are not there yet, and there's a desperate need for instant settlements globally.
Terrific. Just want to make a quick announcement. I think we addressed this a little bit earlier. Someone's asking about the website being down. Lago is doing a new release here today, and so we appreciate patience as Sergio and Matt have very kindly agreed to spend some time with us, the community, answering questions here, which of course will delay some website work by about an hour. But I know I'm very excited to check out the new website and know that we'll see that soon. So if you're in community, don't worry, don't sweat. These guys are working hard.
Keep hitting refresh. Eventually today, you're going to see a lot of interesting stuff. And so we're also going live with USD2 minting platform today alongside the new website. So there's going to be a lot of new information, documentation, and the minting platform.
So yeah, Jose, if you keep mashing, F2 or F5, whatever a refresh button is these days, you might be the first to know. But stay tuned. Okay, some other interesting questions here. Wow, there's a lot. So there's a question that kind of from Justice Canfield on YouTube that relates a little bit to some of this discussion that we brought up about the DAO and kind of future asset backings. But are there plans to create a different stablecoin that is not a wrap version of KW USDC? Maybe use KDA to mint a native stablecoin. I'm curious kind of what thoughts are here, and maybe just add on slightly to the previous discussion.
Yeah. I can
go ahead.
Yeah. I mean, like I said before, I think that there's a lot of issues with trying to use a risky asset to back a stablecoin. I mean, we've seen a lot of problems with bank runs recently. We've seen a lot of problems with major issuers that we think are solvent and don't end up being solvent. I think that trying to build something right now that is based on a risky asset, especially one that moves 20% on the day sometimes, is something that is not great for the long term, and that I don't think that we would really want to see. I think a lot of people like the idea of doing something like that, but when you start to actually dig into the mechanics and see what that looks like from a liquidation standpoint and other things, I mean, just some off the wall things that I would think there. How do you decide what the one true price is? You know, you need an oracle, you need like a network of oracles that can actually have prices at all times. There are issues of like, what exchange are you looking at? What fill price are you looking at? Who gets liquidated? There'd be a lot of big issues that we'd have to solve for that. Yeah.
Let's all remember that the attack on USD and the Terra stablecoin started from gaming a liquidity pool on Curve. Let's remember that. Someone with big pockets drained the pool there and could game a price reading mechanism that triggered into other events. So it can get really complicated. And what Matt kept saying, risky, but really it's all about volatility. And volatility is very measurable. And so the more you can stay away from volatility when you want to peg and stabilize a currency, the better. But there's a big however here. I think that down the line, I'm talking potentially a year or 2 or 3, it will make a lot of sense to start considering other types of currencies that are maybe pegged to other global currencies, not just the US dollar, but also may not be pegged to any of those. So there have been debates within the MakerDAO community, and also there's some stable coins today that are called stable coins. Probably they should have another name, but they're not pegged to a currency. They're pegged to other indicators like price consumer index or inflation indexes. Those are different financial products. Let's not put them all in the same basket. But there's also this huge gray area between the two, where you may want to have a basket of currencies and you want to mix and match against that one. It was one of the earlier ideas of Libra, the Facebook failed attempt to have a global currency, if I remember well, to have a basket of global currencies. It didn't go well with the regulators, and so I'm not making announcements or announcing any roadmap here, but there may be demand globally for currencies that are not necessarily pegged to one national sovereign currencies, and also are not very volatile. We all know why today Bitcoin is not the number one preferred form of payment globally, because it has high fees and it's highly volatile. So you can't really just use it as you would want to. Besides the technicalities of Lightning Network, there's just not a case there. So let's see. There's a lot of open roads ahead, and we're going down the one that guarantees that USD2 will be adopted as a good, stable, and secure and fast transaction instrument. Done that, we may of course look at other options.
Right on. Wow. So community questions keep on flying in. There's another good question from Justice that I wanted to bring up. Where did it go? So there's a question about USDC's centralization and sort of the ability to freeze assets. Curious, to what extent is that a risk, and how do you sort of think about that in context of the efforts at Lago going forward?
Yeah, I can recap a few of the answers I gave before, specifically for this. USDC is a very good product. It's very transparent. It's very well governed and operated. It's very useful. You can on-ramp and off-ramp very, very easily. It's accepted. They also mint on different layer 1 chains. So we think USDC is a fantastic stablecoin. We want to do better in having more decentralization and offer an alternative that is more decentralized than USDC. In order to get there, we have to go through certain steps. For the amount of liquidity that a stablecoin like USD2 has in its first infancy and steps, you need to use something that is high quality, like USDC, and liquid and freely available, like USDC. As the treasury grows, reaches a critical mass, and you have enough liquidity, and the DAO will have enough liquidity and access to different financial instruments, then USDC can be kept as a very minimal resource just for daily liquidity. Absolutely. And other type of real world assets can be accessed directly, but it's not something you can do on day one with a team of 5.
Definitely. We have a couple interesting questions from Ricardo Gonzalez. I'm going to summarize them. Ricardo, appreciate the questions, but want to remind you that we have people here that are builders and working really hard. So I think it's always important, as much as we're tempted to do armchair quarterbacking, to be respectful. He has some questions about the carrying cost and the stablecoin trilemma. So for those that aren't familiar, the stablecoin trilemma, a little less famous in the blockchain trilemma, but it refers to this potential for trade-offs between decentralization, price stability, and capital efficiency in different designs of stablecoins. So often people might contrast, for example, USDC, which has fantastic price stability and decent capital efficiency, in that it's one-to-one, with some compromise on decentralization, versus an algorithmic stablecoin, for example, has tremendous decentralization and very high capital efficiency, in that you can effectively have fractional, in some cases, capital backing a stable asset, but the price stability is the sacrifice there. And that in the case of Terra, for example, the lower boundary for what the price can go to turns out pretty low. So I wanted to sort of get your thoughts as to how do you sort of think about this stablecoin trilemma, and where does Lago see the space for innovation in terms of making a stablecoin here?
Yeah, I would say, in my perspective, I think that we focus on the decentralization and the price stability aspects above all. I mean, capital efficiency is great, but if you don't have price stability, like we saw with Terra Luna, the stablecoin can't continue to exist. So to us, focusing on those aspects is much more important. We like what Frax did, but we think that Frax went a little bit too far into the capital efficiency part of that. And then now, it's very hard to find a use case that's institutional for that. Many people will not trust a stablecoin that has only 90% backing, because if there is ever a bank run, you're in the situation where you only have 90% of the collateral to give back. I mean, and then that very quickly can become a stampede out, and there's no ability to stop that stampede from happening. So to us, it was much more important to be stable and decentralized than it was for the capital efficiency portion.
In other words, if you design a stablecoin for traditional finance, it works very well on DeFi. If you design a stablecoin for DeFi, it doesn't work for traditional finance, for sure. So we have 2 options, and we decided to pick the one that opens 2 doors and much broader growth, and eventually will benefit DeFi as well, much more.
I think a related follow-up question from Thanos around decentralization. If USD2 is KWUSDC, how can it be decentralized if you own the bridge with centralized keys? So I think there's some trade-offs in terms of implementation, detail, safety, security, all that. But I'm curious, how you think about this question, how you think about decentralization, which has multiple axes. Interested in your thoughts.
Yeah, the bridge is definitely a crucial part of the architecture today. This question makes an assumption about key centralization, and I'm not going to comment on that, but it's an assumption. And we'll keep it at that, because being a trusted and centralized infrastructure, there's no benefit at this point in talking about its architecture. But as I said before, this transition through using USDC is a temporary phase as we grow in liquidity, and the DAO will be finally able to access USDC denominated assets on different markets that are non-depending on Circle company in San Francisco.
Right on. And Thanos, you had another great question on the more technical side. We'll save that for more of a technical office hours or Discord chat. I think it's super interesting for the pack builders, and we're going to focus a little bit more on USD2 today. But thanks so much for the other question as well. We have some other. Let's see here. Scrolling down, trying to catch up here. Yeah. Okay. So there's some questions about what happens in the case of a bridge failure, which is sort of everyone's worst case nightmare scenario. But I think that maybe we'll go through this quickly. Sergio or Matt, please feel free to add on. But it sounds like the USDC bridge and wrapping is a way of bootstrapping, as I understand it. So just to paraphrase what we've heard today, USD2 is laying this roadmap for what is to come, and in order to get quickly up and running, there's always this compromise of how can you move fast while still moving towards your ideals. And I guess that's how I conceive and sort of in active listening to the answers I've heard today. But yeah, please correct me if I mischaracterize anything, and feel free to expand if you'd like to.
Yeah, I mean, I would agree with exactly what you said there. I think that, it was a necessary step in the long-term roadmap of what we're trying to do. So, there's obviously always going to be security concerns that you have to deal with. I mean, any smart contract has security concerns as well. So, I mean, I think that you just kind of have to take it with where we're at right now. And then moving forward, we'll try to be as secure as we possibly can be.
Yeah. Also, I would like to add that it's very simple from a spectator perspective to try to identify decentralization as a black and white scenario, and security also as a black and white scenario. Oh, it's audited, yeah, it's secure. It's not audited, it's not secure. Well, I wish it was that simple. Also for decentralization, it's not that simple at all. Is USDC centralized or decentralized? Well, it's on Ethereum. The token is decentralized, yes, but the contract has admin controls for freezing assets. I know. Okay, so it's somewhere in the middle. That's the truth. And in this spectrum, USD2 is positioned much less towards centralization than USDC, and so is the DAO that governs it, and so is the bridge. Also, by the way, talking about bridges, most of the hacks happen to decentralized bridges because they're way more complex to develop than a centralized bridge. That's said that. We really have to understand that in this big spectrum of things, it's absolutely okay to start on one end and move towards decentralization. And all major decentralized projects in the world started that way. Initially, it was an idea inside a person's head, and then it was a team, and then it started building code, and it was in a repository running on one computer, and then it expanded to more. And our technological choices already say enough about our desire for having an underlying network that is strong with proof of work, and that is designed for being as resilient as possible to centralized entities and authorities.
Yeah, I love that point about proof of work, Sergio, because I think that it's easy to forget that, even though we think about proof of work as being this gold standard in decentralization and security and, toughness today in terms of a distributed ledger, that, at some point in time, proof of work and Bitcoin itself was one computer, one node, one miner, Satoshi Nakamoto. And even if you look at that initial era when there was, the first dozen or the first 50 or the first 100 people securing the network, there was a period of a couple of years when, people were mining multiple blocks in a row, when people could have executed 51% tax, that you start with a foundation that can live up to an ideal, and you work tirelessly towards that ideal. And I think as I hear what you're saying, you're really talking about how do you build that foundation that leads towards this ideal.
Yeah, and it's also a constant moving target and a constant moving scenario. Look at the internet as it is today. When Tim Berners-Lee invented or deployed the first iterations, it was conceived to be and meant to be a decentralized thing. And in fact, the first version of the internet was a decentralized network to de-risk against a central point of failure in communication standards across the US. And then Tim Berners-Lee came in, and the web became what it is. And he still is very disappointed today that DNS is in fact supposed to be decentralized, but it's very centralized with a few certification authorities that can pretty much control everything. Look at what happened with Tornado Cash last month. One of the first things to go down was their DNS record. So, you have to see this as moving landscapes, and the intention of the founders is to stay on track, and you have to constantly track what's going on there. Even if tomorrow there's an update in the Bitcoin protocol and most of the miners start taking that direction and is more centralized, you have to stay up to date and see whether you still want to believe in the protocol or want to move your assets elsewhere. It's not set in stone forever, and it's not black or white. That's my point.
Yeah. Thank you so much. As moderator, I think it's always tempting and easy for me to go for the juicy, combative questions and comments.
Go. I'm here for that.
But I also want to mention that we have a very enthusiastic community, and people are coming out from different perspectives and really care. So KDA Miner, with some love here. As much as I don't want USD2 to be a double wrap USDC, it's actually a pretty genius and simplistic move to get a reliable, stable up and out in short order. Matthew Hines chiming in, long-term thinking versus short-term. Love the direction. So one of the things we love about our community is that people push us to make the best version of the project that we can. And so thanks to those that are showing appreciation for the hard work being done here, and thanks to those that are chiming in for some of the more challenging questions to push Lago to be the best version that it can be. Yeah. We're getting towards the end here, but we have so many engagements that, if you don't mind, I want to just try and take one or two more questions before we wrap up. Let's see here. So. And feel free to give me a shout if there's a question here that you want to put on screen that I've missed, as I'm frantically trying to keep track of all the community engagement right now. Let's see here. Here we go. From Luke Kreisman. What does Lago's roadmap look like after the launch of USD2?
The thing about Lago's roadmap is it's going to be very dependent upon the DAO and where the DAO sees things should be going. I mean, Sergio and I have built this and we've launched it, but now it's up to the community to decide the path moving forward. I mean, we have some ideas and we're going to have proposals and we're going to be able to help guide along the way. But at the end of the day, I mean, it all comes down to the community and their ownership of the Lago DAO and the directions they want to see.
Right on.
So, Luke, you're in control.
Great. I have just one or two more questions I want to ask before we wrap up here. So first of all, elephant in the room with Ethereum's the merge occurring here. Curious how that impacts both Lago sort of at a more technical level, and then more broadly speaking, what does sort of this event, which is a pretty watershed moment in crypto, mean for us all here?
Yeah, the merge, the elephant in the room. It's complicated. I think that it's absolutely understandable that various protocols choose their path, and they have reasons to do so. Technically and commercially and societally, there's always reasons and counter reasons. So I don't want to get into the debate. What I think is obvious, though, from this is that there's only one type of consensus mechanism so far that has really been proven to withstand the test of times, or at least a decade or two, and that is proof of work. It's definitely not proof of stake. Some chains have been called VC chains. Some others have relied on a lot of different mechanics that are not necessarily the interest of the stakeholders of the community. And so we believe that the proof of work is more resilient at its core. It's just designed to be more resilient, less interference from easy to access attack vectors like accumulating money, and that's why we chose Kadena, because frankly, out of the proof of work networks out there, is the only one that has a fantastic programming layer on top and is scalable.
Terrific. One final question here. How do you become part of the DAO?
Yeah, so that's part of the next 4 weeks of roadmap. So as soon as we are done with deploying the USD2 smart contracts and interfaces today and this week, in the next week we will start working on creating venues for the community to participate. You may notice already on Discord there's a channel called DAO Discussion, and that's our first stone. Expect a lot more to come in the next weeks. Of course, it will all revolve around holding Lago governance tokens to operate a vote, but at the same time, we stay true to our initial commitment not to operate a community sale or a public sale of those tokens.
Right on.
Let's say something. Maybe if you tune in tomorrow, there's going to be a few more a few more live conversation going on this week, and tomorrow specifically we may already open up to potential ways to get your hands on Lago tokens.
Right on. Hey, Ricardo, thanks. That's really big of you to give a quick apology. You're giving great engagement, great feedback. Everyone gets heated and excited on the internet sometimes. So this is why our community is, we remember that we're all real people working hard, and to the community at large, it's great to be critical. It's great to be constructive and critical. It's great to be positive and enthusiastic. We're all just trying to build the best products we can here and support this Kadena ecosystem. And so, this enthusiasm and this heat and this passion, it comes with the territory. And, this is part of why we love the Kadena army, and why we love Lago is because people are passionate. People have ideals that they want to see projects live up to. And those ideals ultimately are those guiding lights that help inspire progress. So I just want to wrap up by just giving a huge thank you to Matt and Sergio for coming on this AMA. We definitely made an effort to answer as many of the community questions as possible, and not pull any punches, and shoot them straight. And also want to just acknowledge how amazing it is to have Matt and Sergio here on launch day, interact with the community. I think it really reflects their perspective and philosophy in terms of how they want this project to be run. So I know that I personally appreciate that, and I think the community appreciates it as well. So Matt and Sergio, thanks so much for everything you do for Kadena Eco, and for building Lago. Super stoked to see where USD2 goes from here, and the DAO launching. So much amazing content and announcements here today for one video. And thank you, community. Thank you, Kadena Army, for your great engagement and all the thoughts and questions.
You said all the things. Thank you, Tyler. Thank you, Kadena. Thank you, community.
All right. Be well, folks.